But more earnings for now. JSW Infrastructure posted a good set of earnings for the fourth quarter, healthy growth in revenues and profit, and the cargo handle volumes surged. To discuss this performance and more, we have Arun Maheshwari, Joint Managing Director and CEO of JSW Infrastructure, joining us now. Mr. Maheshwari, great to have you with us here. FY24 was strong with both inorganic growth and higher volume handled as well. Let me begin by asking you, what is the volume growth guidance for FY25 this financial year, and what will the cargo mix be by the end of the year? Go on, sir.
Yeah, that's right. Yeah. So, see, we have been mentioning it in all our earlier versions that, infrastructure is a long play. So, if you have to look at growth in terms of company revenue, volume, or whichever way it has to be seen on a longer horizon. And I would say that 5 to 7 year horizons will maintain 15 to 17% CAGR. But if I have to talk a very short term, next year types, then it would be around 10 to 12% kind of volume growth. So, because in infrastructure, the moment you build a capacity, then there's an addition of the volume, or there's any lumpy growth is there. So, it is on a sustainable basis, I would say 15 to 17% is a good enough number to consider in terms of volume growth.
Can you confirm for FY25, what is the kind of volume growth guidance that you've outlined?
On a sustainable basis for 5 to 7 years, we expect the volume growth would be 15 to 17% CAGR.
And what is the kind of potential growth assets pipeline? Are you seeing the number of PPP opportunities in major ports after elections? And what is the status of the Murbi port development as well?
So I would say that, the capacity addition, what we have been guiding that we have already signed post the listing, what we had done about 6 months back. Post the listing, we have signed a concession agreement for developing a greenfield port in Keni in Karnataka for 30 million ton, for which the work is already going on terms of approvals and authorities and all. The second concession agreement, what we have signed is with GNP for the liquid terminal. We are already a winner bidding for Tuticorin port, for which the concession agreement should be signed very shortly. That is 7 million ton. We have acquired the PNP port in Maharashtra. We have acquired oil tankage terminal in Fujairah. So these are all capacity addition we have done. Going forward, if I have to look at it, we will develop this Keni port, which will be happening. We have also guided the market that we are in discussion for signing a concession agreement for a Jatadhar port in Odisha. That would be another 30 million ton, which will be coming up. We are increasing our capacity in Jaigarh port as well as Dharamtar port, which will be adding about 36 million ton capacity. So these are the volume which is likely to happen in another 3 to 4 years' time. So these volumes will certainly take us our capacity from existing 170 million ton as on 31st March 24 to about 250, 260 million ton in another 3 to 4 years' time. So this volume is given. For sure, we see that there are no ambiguity. These projects are approved and it is likely to happen. So that is very clear. On top of it, there are value equity opportunities like government is always wanted to privatize their terminal. So those opportunities keep coming in. We being one of the largest terminal holders in India in the major ports, find it very lucrative because our approach has been very balanced, 50% in major ports and 50% on the private side on greenfield ports. So that balanced approach we feel we will continue to maintain as we move forward. And these opportunities are big enough to consider in our growth plans. So those opportunities or those volumes are not yet considered in our growth plan because we are not sure how much bidding will be coming and how much will be successful in bidding. So that would be an added volumes what we look forward to.
Mr. Maheshwari, so the guidance, just to clarify that point which you've given, does not take into account any inorganic opportunity, any acquisition, or what you said, the government is looking to privatize ports and terminals. I mean, so the volume guidance does not include these these things which may happen.
So what we have considered so far is what projects we have already in hand. Now, government bidding, we don't know how much projects will be coming. We don't know how much we will be successful in bidding. So that is a subjective thing. So as and when it happens, probably those volumes will be added over there. On top of it, any inorganic growth opportunity like acquisition or anything else would be known only once we do successfully that. So those two items are not considered in our growth plans so far. anything happening would be additional benefit for us or additional volume guidance for us.
So given the target of 2.5 times net debt to EBITDA, how much additional growth Capex is envisioned over the next 2 to 3 years? What sort of additional capacity additions can this lead to?
So if I have to look at another 3 to 4 years time, that's the guidance, we may spend close to about 15,000 crore rupees of Capex. And our balance sheet is very strong as we talk today. It's net debt zero. And the kind of cash flows what we are generating every year, and the kind of and the FPO what we have to bring in a follow through FPO for our recent listing, probably we don't see any major Capex requirement from outside borrowing. If at all anything would be there, we'll be well within the guidance limit of 2.5 net debt to EBITDA. Definitely, we are not going to breach in the foreseeable future.
Mr. Maheshwari, can you give us a sense of timelines for the follow-on offering, and how much would you dilute?
So those details are yet to be worked out, but then as per the guidelines, we have to do within the 3 years of listing. 6 months have already passed out, so 2.5 years maybe we'll have to necessarily reduce we have to increase the public shareholding to 25%, which we'll be doing. The mechanism and modalities and everything will work out maybe after 1.5 years or so, not immediately.
Given so much growth opportunity, can we see a further fundraise or internal accruals be adequate?
Yeah, we definitely would. We are not averse to any fundraise. Our balance sheet is strong enough to raise any kind of fund today. But as and when needed arise, then we can always go for it.
Got it. Mr. Maheshwari, could you update us on the interest in the acquisition of Navkar Corp? Any plans to acquire, Gateway Mumbai CFS2?
See, as a growing company, as a large corporate, we keep getting several opportunities. So at this moment, I don't think so it is appropriate to talk on specific opportunities. But we'll certainly guide the market if anything is happening or anything firm coming up. We'll guide you well in time.
So for FY25, what is the revenue margin and bottom line guidance that you can give us?
I would say it would be 10 to 12% growth in all the three aspects, whether it's volume, EBITDA, or revenue, as compared to FY24. This is what we expect to achieve. That's what our internal guidance, and we hope we'll be able to achieve that part.
All right. Thanks a lot for that. We'll sip in